Okay, if you're under 40 and you've even thought about buying a home, you've definitely heard the rumor, right? The promise of the silver tsunami. This idea that millions of baby boomers are about to sell their homes, flood the market with inventory, and finally make houses affordable again. But is that hope based in reality, or is it just a myth? Today, we're going to dig into the data and find out what's really going on.
So, here's how we're going to break it all down. First, we're asking, is this silver tsunami even real? Then, we'll get into why so many of these homes seem to be locked up and off the market. We're also going to tackle that popular theory that it's all Wall Street's fault. And finally, we'll land on a verdict, what the housing market is actually going to look like for you in the very near future.
All right, let's jump right into the big one, the tsunami. It's the story we all want to be true, that this huge wave of boomer homes is just around the corner, ready to wash away the affordability crisis. But, when you actually look at the hard numbers, a very different picture starts to take shape.
I mean, this is the question, right? It's at the center of so much anxiety for millennials and Gen Z. And look, the logic makes sense. A massive generation gets older, they sell their homes, and boom, a surge of new inventory that should, in theory, bring prices way down. But, as we're about to see, it's just not that simple.
And on the surface, you can see why people are so hopeful. The potential is massive. According to RIS Media, baby boomers control a staggering 41% of the entire country's real estate assets. I mean, that is a huge piece of the pie. It really should be a tidal wave of new inventory coming our way.
But here's the reality check. It's just not happening. All of that incredible housing wealth isn't turning into a flood of for sale signs on front lawns. This tsunami that everyone's been waiting for, right now, it's just a trickle. And the reasons why are absolutely critical to understanding where the market is headed. Wow. Yeah, this slide really puts it all in perspective, doesn't it? The World Property Journal found that only 7% of all home sales actually come from inheritance. Just 7%. That is a tiny, tiny drop in the bucket. And it's pretty clear proof that this big demographic shift isn't going to be the silver bullet for affordability that so many of us were hoping for. So if the homes exist, but they're not being sold, where are they? Well, that brings us to our next big point, what we're calling the Great Inheritance Lock. You see, there are these really powerful forces, both financial and personal, that are keeping millions of these properties off the market. It's a story you probably haven't heard. One of the biggest and, frankly, least understood reasons is something called a Medicaid clawback. It's this government program that can literally try to recover the enormous cost of long-term care from a person's estate after they've passed. And since the house is almost always the biggest asset, families have this huge incentive to protect it at all costs, not sell it. And this quote from an elder law attorney just nails the mindset perfectly. The whole goal for these families is to pass the home down as a legacy for the next generation, not to have it become a liability that gets sold off to pay medical bills. So families are using every legal tool they can to shield these homes from being liquidated. And it's not just about Medicaid either. We're also seeing a huge trend of boomers just choosing to age in place. They're staying in their homes longer. Then you've got tax laws, like in California, that can make it financially painful to sell. And on top of that, there's a growing trend of adult children just moving back into the family home instead of it being listed. Add it all up, especially with boomers having a ton of home equity, and you've got this perfect storm of factors, locking that inventory down tight. Okay, so if the boomer buy signal is basically a myth, what about the other big villain in this whole story? Let's switch gears and talk about the Wall Street factor and see if these big institutional investors are really the ones to blame for pricing everyone out of the market. You know the story, we've all heard it. Giant, faceless corporations with endless cash are swooping in, outbidding regular families for starter homes and turning entire neighborhoods into rentals. It's a totally understandable fear. But what does the data actually say about how much of an impact they're really having? Well, the reality here might actually surprise you. Research from JP Morgan shows that these big institutional investors are only buying about 1 to 3% of single-family homes across the country. Now, don't get me wrong, their impact can feel huge in certain hot markets, especially in places like the Sun Belt. But on a national level, their footprint is a lot smaller than most people think. And here's another really key point. Their whole strategy is changing. Instead of competing with you for existing houses, a lot of these big firms are now just building entire communities from scratch, specifically to rent out. That's a huge shift in their business model, and it totally changes their direct impact on the resale market where most of us are trying to buy a home. Okay, so we've pretty much debunked the silver tsunami and we've put Wall Street's role into perspective. With those two big myths out of the way, what does the future of the housing market actually hold for us? Well, that brings us to our verdict, what some are calling the Great Reset. This slide tells a really powerful story. Just take a look at the 2026 forecasts from some of the biggest names in the game: Redfin, the National Association of Realtors, and JP Morgan. Yeah, the numbers are all a little different, but the message is exactly the same. Prices are expected to be basically flat or maybe rise just a little bit, and sales will gradually start to pick up. The key takeaway here: nobody, and I mean nobody, is predicting a crash. So this is what Redfin has dubbed the Great Housing Reset. It's not some dramatic price correction that's going to suddenly make houses cheap overnight. Nope. Instead, it's going to be a long, slow grind back to some kind of normal where affordability improves little by little as our incomes hopefully finally start to catch up with home prices. And the reality of this Great Reset, it's going to have a huge impact on how we all live. Even with these slow, gradual improvements, owning a home is going to stay a major challenge for many of us. That means we're probably going to see more multi-generational families living together, more people pooling their money with roommates. And for a growing number of people, renting is just going to be the only viable option for the foreseeable future. So we really have to end with this question. The data is pretty clear. We can't just sit around and wait for a crash to solve this affordability crisis. We're entering a totally new era for housing. And this Great Reset, it forces us to ask a really tough question. What does the American dream of owning a home and finding financial stability even mean for a new generation? It's a question we're all going to be grappling with for years to come. So before you can make any kind of smart move, you've got to understand the field you're playing on. What experts are calling this period is pretty telling: the Great Housing Reset. And no, that doesn't mean a crash. Think of it more like a slow, steady recovery. And that's where the opportunities are hiding. Okay, so what does this reset actually look like in hard numbers? Well, Redfin's calling for the 30-year fixed mortgage rate to average around 6.3% for 2026. Now, that is some relief from the recent highs, for sure. But, and this is a big but, it's still pretty high historically. And that's what's going to keep a lid on prices just exploding again. And that leads us right to prices. The median home price, it's only expected to creep up by about 1% year over year. Now, here's what's really interesting about that tiny number. It means that for the first time in what feels like forever, your wage growth could actually start to beat home price growth. Affordability might slowly start to get better. And this number, it really drives home just how slow and steady this recovery is going to be. We're looking at existing home sales rising just 3% from 2025. The market isn't just going to snap back to normal overnight. It's healing. And that slow pace is exactly what creates some very specific openings for smart players. All right, so how do you actually play this market? Let's talk about our first move. This one's for the buyers. And the key here isn't looking at the whole country. It's about zooming in on specific pockets. Here's the most important thing to get. Forget the national average. It's basically useless right now. What's really happening is a great divergence. While some areas are just treading water, those Sunbelt markets, the ones that absolutely boomed during the pandemic, they're now facing a much longer correction. And here's the list. Redfin laid it out for us, a clear rundown of these Sunbelt cities where inventory is starting to pile up a bit and houses are sitting on the market longer. For buyers, listen up, these are the places where you might actually have some negotiating power again. Less competition, more leverage, that's where you could find better value in 2026. Okay, let's get to our second move. We're calling it the family pivot. And at first glance, yeah, it looks like just a lifestyle trend. But trust me, underneath, it's a really powerful financial strategy to protect your assets. So we're seeing this massive trend of families moving back in together, right? Renovating to add in-law suites, making space for adult kids. And yeah, it helps with the crazy housing costs, but the real driver behind this is something much bigger. It's a financial move to protect the family home. Exactly. Is this more than a trend? You bet it is. This whole shift is happening for one critical reason that has nothing to do with saving on rent or sharing childcare. It's about protecting what is, for most families, their single biggest asset. And that reason is a federal rule called Medicaid State Recovery. Now, let me break this down because it's super important. If a family member over 55 gets long-term care that's paid for by Medicaid, the state is legally required to try and get that money back from their estate after they pass. And what's the number one asset in almost every estate? You guessed it, the family home.
But, and this is where the strategy comes in, there are specific ways around this. There are clear exclusions. As you can see right from Medicaid's own guidance, the state can't come after the estate if the person is survived by a spouse, a child under 21, or a blind or disabled child of any age who's living in that home. So you see the connection? This whole housing trend of renovating for family isn't just about togetherness. It can be an incredibly powerful asset protection strategy. If you structure your family's living situation the right way, you could potentially shield that home from being sold off to pay back Medicaid.
All right, our final move. This one is universal. It doesn't matter if you're buying, selling, or staying put. This applies to every single person listening. Look, what we've talked about today are some powerful strategies, but they are absolutely not one size fits all. That Sunbelt opportunity, it depends entirely on your job and your life. The family pivot, that requires very careful planning with an estate lawyer. Your move, whatever it is, has to be tailored to your unique situation by a professional you trust. So we'll leave you with this final thought to chew on. In a market that's slowly and deliberately resetting itself, choosing to do nothing, well, that's still a choice. Inaction is a decision, and it comes with its own risks and its own potential rewards. The trick is to understand what they are.